It's a beautiful morning in Bangalore today. So quickly, it's interesting to take the first panel because we set the context for the entire day. And there are a couple of moderators who were messaging saying that you guys don't cover everything because we need some points to talk. So we tried to we are going to stick to a theme that we have created. But before that, what I'm going to do is I'm going to spend some time to introduce and let them introduce themselves. So I'm Vaibhav Joshi. I've been a banker for a long part of my life, and I've been a startup guy as well, doing startups, fintechs. And now what I do is I work with banks, NBFCs, and startups to help them in their growth journey, partnership journey, and their investment journey. And I would request all panel members to one by one introduce themselves, and then we can start the panel.
Hey, hi. This is Giridhar. I head the business for Zaggle, which is a spend management company. We do consult a lot of corporates on both on corporate spends and employee spends. Been in this industry for more than 17 years, consulting corporates on a lot of policy making and spend management practices.
Hi, I'm Hrushikesh. I actually run the financial services at ONDC. I think Praveena talked about the big gap in credit, insurance, mutual funds. I think my job is to try to bridge some of that. It's a tall task, and especially in the wake of what Aadhaar, NPCI, and now what the account aggregators are doing, I think we have big shoes to fill for people who have done things in DPI before us.
Morning, everyone. I'm Jaya Janardanan. Been a banker for 27 years, exited my banking career in 21, and I thought that one of the challenges that we all faced on the other side of the job when we held senior position was execution challenges. We had everyone to consult to us, but when it comes to execution, it became a huge challenge. And with that in mind, I set up Krayontek Solutions, an organization that focuses purely on execution. So we work with BFSI segments currently and help in executing projects, process reengineering, or setting up the entire business for the organizations as required. So that's about me.
Hi, good morning. My name is Yuvraj Ashok Thakker. I am a stockbroker and a fintech enthusiast. Third generation managing director of a predominantly proprietary driven organization. Sold a couple of fintech startups to PhonePe. Nice to see their name on the sponsorship board. Essentially, StoxBox is our attempt at bridging the gap between the Uber Ultra HNIs who have all the information and the research in the world and the rest of us who are making investment decisions based on what our mothers, fathers, uncles, kakas, mamas tell us to do. Thank you.
Hi, good morning, everyone. I'm Shashank Sharma. I'm a co-founder with ScoreMe. Well, at ScoreMe, we work in two parallel aspects. One is on the data aggregation side, where we try to build, analyzers around different documents which today are being consumed for any kind of credit decisioning. Stuff like bank statements, CSD, and a lot of information which is available from the borrower's end. And we also work parallelly in the digital lending platform space, where we create end-to-end digital lending journeys on different products, primarily linked to the retail, agri, and the MSME space in the country. So we've been working with roughly around 100 institutions now. And good to see, your presence here. And I think we'll have a good discussion here. Thanks.
Good morning to you all. My name is Jayakrishnan Rajagopalan. I am an enterprise architect with Kyndryl, about 30 plus years in the industry. Half of it is in my own company's healthy mix of ERP, design to delivery, fintech, and data as the value of it I learned by co-founding the first trusted e-commerce in India, M.V. Kirsha, which was very specifically focused on enablement of a marketplace for rural markets for the urban brands. In Kyndryl, part of the applications data and AI practice, focusing specifically on the BFSI space, two key objectives that I'm working on. What's the value to monetize data and how to actually link the API economy, which every banking sector clients have. How do they bring that to bear is the key focus I'm working on.
Thank you, everyone. It's a pleasure to be on the panel with all of you. So when we talk about data, and our topic is leveraging data for financial innovations, when we talk about data, has been there all the time. And for the past couple of decades, we have been finding out methods to use that data. For the past decade or 2011, 2012 onwards, we got an entity like NPCI, which where a lot of this sorting out kind of started happening, and then now data. Leveraging data from a payments perspective, from a lending assets perspective, from a retail liability perspective, from a wealth perspective, from an insurance perspective, or from any other perspective when it comes to BFSI, it's right there. We have seen the AA framework coming in. We have the enabler fintechs, we have the infra fintechs, we have product fintechs, and finally everything boils down to data. So what is it that we say when we talk about leveraging data? And just trying to set the context for the panel in another 2 minutes. So if you look at previously, the underwriters still used to use data. Okay, when underwriting was done, even in maybe 5 decades back, there was data, but the data was in a very different form. Okay, that data was what I know, what I see, what I have in front of me, and based on that, I'm going to underwrite. And today, that underwriting still happens in probably a city like Bombay, where there is no data-driven decisioning, but there is legacy data, traditional data-driven, offline data-driven decisioning. Okay. What has happened is now with all the data coming into a structured format, with the bureaus coming in, there came a way where, you could actually take a CIBIL or a CRISIL report of somebody and then, take a scorecard and then underwrite. And I'm trying to limit myself to lending to set the context, and then we can dwell into others. And then eventually, a lot started happening on the alternate data in the past decade. Okay, alternate data in terms of GST, business data, how much dhanda is doing. In between, SMS scrubbing came in, and then, with the privacy and everything coming in, that was stopped. So a lot of that lat long social media data, there was so much social media data that is available. There are APIs for that. That tells you actually, this guy has been on FB for last 10 years. He stays in this locality, this pin code. Okay, he stays in an influencer locality. He has, 10 loans going on. He has 2 children, one is at the age of marriage. And, the lender says, okay, this is my right customer for PL. So data availability, accessibility, now we are right at the peak, and, we are just going to keep on innovating. So on that, we have tried to divide the panel into some topics. So one is data-driven decision making. Second is predictive analytics in finance. Third is machine learning. Fourth is the challenges, and fifth is the innovations to do with that. So Jaya, I'm going to start with you and Shashank for my first question, which is, why is data crucial for financial innovations?
So, just before I start responding to your point, Vaibhav, so when I started my life as a banker, and I was working in operations, and I was sitting for a review, and they had the business and the ops have constant arguments with each other, saying that this is our business, this is the ops has not done it. So the question that my boss asked with a straight face to the person who was presenting the issues was, all these complaints that you're seeing is fair enough. Do you have data? Do you have something to justify this? And he said, no, it's all what my team is telling me. And then he asked the next question saying that, are you God? So he says, no, I'm not God. So my boss that day had made a statement which is still ingrained into me so much, and which is the reason why this particular subject is also very close to my heart. He said, I believe only two things. One is I believe data, and if you don't have data, then you have to be God. Then I believe God. That's been such a strong statement to us all at that point of time. And today, after 30 years of being in the industry and working, data continues to be ruling everything in the industry. And if you look at, we were from the era where you started off with the physical banking, then became a Y2K, then became a digital banking, core banking, then a digital banking, and now you're into an era of AI and machine learning and multiple other technologies that have come into place. Data still is the king. So it's basically data that drives every decision in everybody's day's life. That be it's an e-com or you be in your financial services, whether you want to give a loan, whether you want to onboard. See, at one point of time, as bankers, we were open to everybody coming on board as customers. But today, the bankers can take a conscious decision whether you want to let someone come into your bank and be a customer, which is called as a keyhole theory, right? They actually decide who they want to be your customer because they have data to say that this person will not be a right customer for the organization. You go to a website, you go to an e-com website and you just show your interest to buy something and generally start Googling all those brands, and suddenly you have this SMS which comes to you or a WhatsApp which comes to you saying that, oh, we see that you have been seeing this. Are you interested? Do you need? What's all this? It's all about data playing around with you. It actually is in your life, an integral part of your life. So every decision today, whether it's finance, whether it is any other industry in today's world, is taken based on data. Financial services, all the more reason is because it's a question of lending and receiving money, right? As a savings, as a bank, you also lend, you also take money. While you actually manage money, are you doing the right thing? Are you lending to the right person? Are you actually knowing what exactly that customer is up to before you lend your money at the cost of the interest or the money that you get? So typically, it's also taking you a step forward to make sure that you know what you are getting into, you know where your money is, and you know that the decision that you've taken to make someone as your customer is the right decision, and not tomorrow repent saying that you. And people are conscious about the growing NPAs and the customers and frauds that exist in the system. Without information, without doing analytics, without understanding who does what, it's very, very, very difficult to actually own a customer. And with regulators and everybody coming up the sleeve saying that KYC, know your customer, know whom you're talking to, know if there's a flesh and blood behind that particular name, it's all data that actually validates it. So in financial services, while it is all about money and therefore data plays a very critical part, any other industry today has used data extensively to actually make sure that the decisions are right. Going forward, it's not like, as they call in the technology world, the dark web, that you don't know who is there. Here, you actually take a decision based on someone who is there, and therefore you know what you're doing, and therefore you actually are conscious about what you're doing in the financial services space. So data is very, very critical as far as the financial services space is concerned.
Thank you, Jaya. So but this reminds me, of my younger days. Okay, just a quick story, and before we move to you, Shashank, I used to go to this grocery store. Sometimes my mom would send me, "Ye leke aao." So I would go there, and that guy would, I'll tell him the list, ye de do, or he will give it to me, and I never paid money to him. Okay, it was a monthly khata that he used to maintain. Okay, now know your customer, KYC. He knew the customer. He knew those 100 families, 200 families that he was servicing. He maintained a khata of everything. And then I was like, I was intrigued that something is there. And I was really a kid, like it would be in my, I don't know, second, third, fourth standard. And one day I asked him when mereko ye chocolate dena, he was like, he gave me the chocolate. I did not have to pay for it. Okay. I was like, interesting. Again, so Shashank, over to you.
Yeah, so I think how we can look at this is primarily, I think, two aspects of this. One, what I feel is that it has a lot to do with the end users' expectations today. I mean, the ecosystem in which the country is evolving now, like you mentioned that, the expectations in the old days were you were curious to know that, how this particular event is happening. I think nowadays the end user is more educated than the lender himself. And he knows that there is a layer of digital footprint data which is available. And if that is not exercised, then till the time, he reaches out to the lender, he expects a decision. Now, it is all going with regards to the timeline that, for example, today, if we are trying to take a line of credit on, let's say, a personal loan, our expectation is not that we will reach out to the lender and they will ask us for certain data points and documentation and then we will get to know a decision. Today, I want to be educated, I want to be informed. And, it is, I take this as my right that I should know that basis my profiling and my credit, history, where am I standing at? So, I think as end users, we have also evolved a lot with regards to understanding of the data. And I think once the end users started understanding the data, it automatically became a part of the ecosystem. That it has to reach to that scale so that it becomes available at a mass level. And I think secondly, it has also to do with the evolution of the ecosystem on the other side. See, today, if you look at the regulators in the country, we are all pushing towards digitization as one of the major aspects. We're looking at account aggregator framework. GST got introduced. It's pretty matured in the country now. We are looking at payment space, insurance space. If you pick any of the BFSI, regulated entities, there is a push from the regulator to have more and more digitization imparted. Now, again, to have a layer of digitization, what you had mentioned in your opening remarks is that we today are sitting at a layer of structured data. Now, when we have structured data in hand, it becomes very, I would say, important to include it in terms of any financial innovation. Because one part where we were lacking behind before the entire digitization got imparted, there was a mass end user audience which was available. Data was not structured. It was segregated into bits and pieces. Today, we are at a stage where we have consolidated all of that. We have, data-driven pipes enabled by the government. Today, we talk about KYCs as one of the very critical aspects, for example. So I don't think that, anybody in this room or maybe, if you interact nowadays with anybody, they talk about a physical KYC anywhere. We have, stacks like API Setu, which are open stacks available by the government side. You have not just for KYCs, which are your OVDs, KYCs beyond that. I mean, how to analyze that, I have been a consumer of electricity at a particular location for the last maybe 3-4 years. We have that digital data available. And I think now we are even going into a next layer of that, which is actually leading us to financial innovation, is that we are trying to build embedded finance solutions in terms of that. So in order to take, the decisions from orthodox lending towards a digital lending and then to include, I would say embedded solutions in that lending, it became very inevitable for the data to be, analyzed on that note. And so I think both sides have been fairly important in India. So we as end users and the lenders as the other side, they have exercised this data very pretty well, and we are sitting at a fairly decent position globally. If I talk about, I have seen audience from the external countries who observe India as how the lending in India happens and how the payments interface, for example, in India is happening. I mean, now we are governing and we are guiding other countries on that part. So I think it was very inevitable that the data has to be used there.
When we talk about data-driven decisioning, I cannot stop but wonder, and a couple of points that Pravina was mentioning earlier, we talk about data privacy, we talk about data security, consent being the most important part of it, okay? And initially, I used to, be wary of, what apps I'm installing, because you keep on scrolling, and at the end of the day, at the end of that page, you click on I agree and just continue. And we barely read it. I'm sure not a single one of us would have probably gone through the terms and conditions of, even one of the apps that's been there. And we don't know what kind of consent they take. Being a ex-founder myself of a, MSME neobank, I have seen and I know for a fact the type of consents that we used to take. Practically anything and everything on your phone is not unreachable for us. Okay, so if you have certain apps in your phone, then those somewhere, on their servers, everything is getting tracked, even when your probably phone is on flight mode, where you're traveling, your lat long, everything, what apps you have installed, who you are chatting with. There are so many things, and that is why, this data privacy bill is so extremely important, and probably, in a society like India, the seriousness of it, we as citizens need to take up. I was just recently chatting up, I was doing a session for, a batch, college batch. And I was telling them, guys, you are on Bumble, you are on Tinder, but, there are so many apps that know that you are there. Okay, so be wary of everything that you use, because there are so many apps, there are so many servers that know what you are doing. Leading on to this, let me come to Jayakrishnan. Jack, leading on to this, what are your views on the data privacy, data security, and the consent architecture when we talk about, as we move from an institution-based decisioning to a database decisioning?
Absolutely. I think, as Pravina said, part of the minority community of knowing what you're going to give consent to the usage of your data, the education is or awareness has to be on both sides. Not only the consumer whose data actually is being given by the consumer with or without their knowledge, but also the application architects or designers or solutionists who are designing applications to consume the data. The shift left the entire approach of what is the data that you're asking for? Why is it required for the purpose of your use case? This typical approach, as you said, every app now just harvests all data and then keeps it some storage, hoping somewhere in the future they can utilize data genuinely for the purpose of their use case or just decrypt it for the purpose of any other spurious activities, right? This being the case, data comes under three segments in my mind. One is data privacy, and hence the categorization of whose data, who's using it, and what purpose of it, and who's to provide the consent. And within that, the architecture, which is very well defined with our DPDP, and account aggregator has been a tremendous implementation of that. How much of that will get implemented going forward across all the stakeholders? That's going to be the key, first aspect of it. Second important part is the data protection. When you talk about data protection, we're talking about data in transit and data at rest. And there are various technologies that is currently being utilized, data at rest, protecting it from the outside-in attacks, but also the data in transit, wherein which a lot of the transportation algorithms now are trying to become quantum safe to say, even if you can harvest now without knowing how to decrypt it. So the fact is that harvest now, decrypt later approach on the data in transit is going to be key, right? Consent, data privacy, hence the consent management, data protection at design and as well as at the point of where the data is being utilized across the entire value chain. Could be somebody who is asking for data from an API economy point of view. What are you asking for and why? It should be designed when you are creating the API design. That's one of the key focus areas in my mind, and that's something which we have seen. Recently, one of the banks that I'm consulting with as a mentor for their API economy, they have 340 plus APIs, out of which only 15% of the APIs actually are being utilized by the ecosystem. And the best part is those 15 APIs have data which is equal to the 300 APIs. It's been like started off with one API requesting data segment 1, then second API data segment 2, the third API data segment 3, and then the fourth API was too many APIs for me. So just give me one mother of all API. That's how they're building it, and now nobody has control as to what is the API for what purpose, who asked it. It's just lying there in the middleware, and then people are just consuming it. So right sizing the data is a key from a design perspective. Being architects and also the consumers and the guardrails of the industry, privacy starts at design, not at the implementation stage of it, where the awareness and education comes. That's the key consideration from my point of view.
You made some very interesting observation on the APIs, okay, and I'm going to make a point over there because there are so many APIs available in the market, and a lot of those APIs are so cumbersome to work with sometimes that on that front now I feel is where the next innovation is going to happen. So probably on the API bit, there are a lot of probably enable startups which should come up and make it less cumbersome. Where there is 4 API calls required, probably one can, do the job. And yeah, and that's where, also what happens is the tech rails or the tech infrastructure that our country has already built, the public infrastructure, which actually is, like we are one of the best in the country. So right from JAM, Trinity to now ONDC, Open and so on and so forth, AA and everything. Somewhere at some point in time, even those tech rails will need to, become agile, and those APIs, instead of consuming, 35 APIs for something, probably a 2 API would do. Go ahead, Jack.
Just to add one more point to the fact that you said, optimization of the API at design and optimizing it for the consumption. Those are two different things altogether. Optimization by design can be done by you as the product owner, that you will know what is the purpose you are giving it for. Optimization for the consumption would be basis who's your customer, who's consuming it. You could be a middleman. I was very fortunate to be part of the architecture team of the public tech platform for frictionless credit, which is RBH's, as per our Prime Minister Ji ki. It's a UPI moment for credit, per se, to start with. That had a very different thinking. It's not about just plumbing all the gaps in the current STP process. The whole idea was to say, let's reinvent it by making everything digital first. It has to be digital native for every lending journey per se. And this approach of, if a bank or an entity wants to ensure that lending origination completes in the approval process, what are the steps required? And today, how many of the APIs that they're consuming for what purpose of the process steps was completely broken down, and API structure was created so that the right participant, and then the multiplication of that. Why multiplication of that? Because the entity could decide to say, I would want to work not only with a person or a organization, but multiple for their BRE purposes. So that's something which is very important, to optimize it by design, optimize it for the consumption also.
Fantastic. Let's move on to the second part of our panel, which is essentially predictive analytics in finance. And I'm going to move on the right side of my panel now. So, Hrushikesh, let me come to you, because, when we talk about predictive analytics, a lot of that has been basis, all the data structures, data forms that have been there, the libraries that are there, the sources that are there, and we pick and choose the data. So, and let me go back 2 years, when I was building EasyPay, which is one of the first ESPs to be live on ONDC now. When we were, when we were onboarding an MSME on our platform, we used to pick into so many data sources, and then we would have a credit AI run its own, algorithm, and then we would create a scorecard A, scorecard B. We would do a financial profiling, do a lot of bureau data, alternate data, so on and so forth. ONDC as a platform, okay, it is very interesting for me to understand, and we all are very inquisitive to understand, how would ONDC look at predictive analytics? Because ONDC today we are looking at as a platform where, it is probably, going to replace at some point in time, what RuPay did to MasterCard, Visa, ONDC is going to do to e-commerce. Okay, I'm hoping.
So let me strongly refute that. I'll try to clarify what ONDC does, what our role is. And I appreciate the optimism on the left side of the panel about the standardization adoption. I'll give you some of our experience as we are pushing lenders and manufacturers over the line into digitizing. Even our experience with the regulator and policy. We sit on MSME lending, working groups with the ministry, and none of it is easy. And to what Praveena was referring to, it's a market-making job, but we'll come to that. First, what does ONDC do? We are not a platform. We are just APIs. And what is our role? See, the issue is to standardize. See, the regulations are standard. Unfortunately, RBI is not always terribly clear about what the regulation should do. So there's some interpretation. And what has happened in the market has evolved into some interpretation and versions of what the regulations should be. And that is the truth, whether we want to agree, and that is the experience we've had, whether it's an NBFC, small one, large one, and a bank interprets the same regulation differently, right? So the first issue is, but the regulations are the same, black and white. The first issue was, can we standardize the process? Because everyone needs data to underwrite. Someone does some modeling, risk appetites might be different. You throw back an offer, then you have to do KYC if they're not already a customer. You have to take a disbursal account, you have to send up a repayment mandate, and you have to sign an agreement before any disbursal happens. It cannot be digitized beyond 60,000, because after 60,000, you have VKYC, which completion rates are, debatable how good they are the more into the hinterland you go. So there is some solving that needs to happen, but the point is, that is the process by and large. Larger organizations, departments add value, so more data fields, which are probably not used. And I quote experiences with lenders. You say, why is that data field there? Pata nahi tha pehle se, to rakha hai. So he said, go ask your underwriter and remove it if you're not. And that's what we've done. We've standardized the rails. So the first step is standardizing the rail. Now, even after you've done that, it takes massive effort to get the larger organizations to adopt. I won't quote the names, but there are some banks who didn't have the ability to send a payment URL in this day and age, right? So if you had to do something digitally and collect payment, they were still on PDCs. So they had to push that over the line, had to develop the capability to do it. So what have we done? We've developed the standardized rails. We've not talked about it much. I think last week there was some article in the Eco Times which they strong-armed us into responding to. So we are live with credit. We have 5 LSPs, we have 2 lenders, we have a 6-minute journey, standardized using data. So our role is to connect the manufacturer to the where the digital native customer lives, right? And we build under the assumption that in the next 4 or 5 years, most of our, the Indian population will become digital natives. And it should become very easy for what an LSP or a buyer app to be able to embed credit, embed insurance, embed mutual funds. So technically, we live in a world today now that if you became a payment app with UPI, you can offer credit of ONDC, you can offer insurance of ONDC, you can offer mutual funds of ONDC, obviously if you're licensed by the regulator. You could actually create a quasi-bank without actually needing a license. Now, that is the role we play, and the idea is, can I digitize these, connect the manufacturer to the digital native, borrower, investor, insured, and then can I do it very simply? So for example, startups struggle to get the attention of large manufacturers. Small manufacturers struggle to get the attention of large big tech players like Google Pay. If we have, or Google Pay, Amazon, whoever, they're not going to waste their time with someone they think is too small or won't generate enough business. We take away that. We don't prioritize. If you are 2-man IIT grads who want to start a buyer app, you're welcome to come to ONDC. If you're Google Pay, you're welcome to come to ONDC, and we will not prioritize your attention basis size, but on basis your intent to build and move forward. So first, that is the role that ONDC plays. Now, the other issue is data. So look, data resides everywhere, actually when you scroll on Instagram, you're giving them data, but you do it happily. They're also listening to you. So I don't know if you use Flipboard or Instagram, but when you are using it, and even if it's there and you're having a conversation, realize that the next thing you start getting served what you were talking about. So you don't even know your voice is data, but there you give it. For people like us, and this is the other thing, we solved for the 100 million. Even I would be very reluctant. So when I tested, we are live on Paisa Bazaar, I was testing. I was like, should I give my A consent? But I said, I have to test my own flow, so I gave it, right? But we don't want to give it for that. But for anyone who's hungry for a loan, they'll give you whatever data they want, right? So it's an issue. It's really an issue of need. When you don't need it, like I'm sure everyone in this room gets 2 calls a day minimum from some telecaller saying, "Yaar, loan chahiye, main ye finance se hu, ye finance se hu." So hopefully that will go away now, right? So, but what we've done, so now you've got the basic rails. The next evolution is there's all this data sitting, on platforms that run other businesses. And I'll give you 2 or 3 examples, which we are going to try. They're hard examples to solve for, and we're going to actually try to solve for them as reference use cases. One is, there's this company called Stellabs, right? They collect milk pouring data from dairy farmers. Dairy farmers today have to go to 4 sources of financing before they can, and this is going to sound funny, but buy a cow for 80,000 rupees. We want to create a use case where can I get this milk pouring data packaged for a lender? The farmer can actually choose to consent to share that data. It'll be like, how much milk have I poured in the last 3 months, 6 months, aggregated, not every transaction. Can they also use the account aggregated data? So even if they're not on the credit bureaus, and what I failed to mention is I helped set up CIBIL and spent many, many years there, so I'm very familiar with doing this. And share that with the lenders, and then the lenders can, within that 6-7 minute journey, give that 80,000, pre-approved, confirmed offer, and subject to KYC and all, in the next 10 minutes, disburse it. And I'm not saying this will happen. It's already happening at a small scale. We are live on ONDC with this. And you're free to test it. It's on the homepage of Paisa Bazaar. Don't sign the agreement if you don't want the loan, but you can go through the whole thing in 6 minutes, and they won't call you. That's the big difference, right? So that's one of the use cases. We're also working with another company called Absolute. We've packaged their crop yield data for farmers. So how much does the land yield? And then if they want to take a loan to buy seed or whatever, they need to buy. And the third one we're trying to do is with Bizom. So they're a SaaS company with data of transactions from kiranas to distributors to OEMs. So they have actually created 1 by 1 kilometer square areas of data, and they can benchmark how one Kirana guy does, in his general area or her general area. So it's diversity of product, size of order, frequency of order, and they've actually scored it. So created a score for that data. So, these are hard cases. These are cases that lenders don't finance today. They're 5,000 bucks, 10,000 bucks, 80,000 bucks, small ticket. So we are going to try to do the most extreme example, because if you are able to solve for that, we'll solve for everything else. So that's how we'll propose to use data. Everyone asks, how will you use ONDC data? ONDC has no data. We don't store any of it, but we will help unlock data that sits on other platforms to be able to underwrite. The last thing I'll say in terms of market making that we need to do, it's not enough to do all this. So the other things we're working on, so you'll hear, hopefully in the next couple of months, we've worked on a new to credit guarantee for MSMEs, so that lenders feel comfortable giving. It's called the Nirman scheme. Hopefully it'll get announced. We've been at it for 2 years. We should see the light of day now in the 100-day plan. Also an interest subvention to make it cheap. So a 2% discount to borrowers, first-time borrowers. Otherwise, they're always provided a much higher rate of interest when they're first-time borrowers. So imagine if you have a credit guarantee that gives lenders comfort. The borrower is given a slightly discounted rate so that they can create track. And then subsequently, as they take multiple small loans, they can get larger and longer working, longer term revolving working capital lines. So while data is good, and the other thing is driving the lenders to do all this, they don't have the muscle to consume, to interpret. There's, I was talking with Jaya earlier, I think there's this massive opportunity for TSPs. Not a single lender in like the 2.5 years that I was I should say not a single lender, one lender built their own tech. All the rest was built by TSPs for the lenders. So I'll stop there.
Thanks, Hrushikesh, for that perspective. And, the way ONDC has grown from when I used to know it and to what it is now, we used to think that it's a platform and it's going to end out to APIs. Amazing. So let me bring you in over here. Okay. Yuvraj, and then I'll come to you, Giridhar. Do you want to add something to what, Hrushikesh was mentioning?
I mean, it's the use of data, right? Primarily we're alpha hunters, right? Being in the markets, high frequency trading, data-driven trading. It's what Rishikesh mentioned about crop yield, right? Way back in the day, 8, 9 years ago, 10 years ago, when we started getting access to satellite data, we started predicting crop yields in a very for lack of a better way, raddi fashion, in a very dirty fashion, simply looking at the amount of green we can see on the ground, tracking the amount of shipment trucks leaving the auto manufacturers and the auto ancillaries. Another interesting point of data is, did you guys know that real estate follows an N curve to the sale of elevators, right? When elevators first start getting sold in an area, real estate prices rise, and then after there are too many elevators being sold in an area, the real estate prices fall. I mean, obviously now looking back at it, it's because of oversupply, but all of these are very, very exciting ways to use data when we're looking at it from an alpha generation perspective, and that's all we do, right? All we do is look at how to generate, or rather massage, interesting, actionable insights into mundane, unorganized, previously, now very, very organized data.
So I just wanted to comment on one thing. Sorry to jump in, but I didn't cover that ONDC is not here to kill anybody. So here's the thing. And I'll use NPCI's example. When UPI first came about, it was supposed to be a card killer. Right? The MasterCard, Visa are going to die, blah, blah. Sure, it might have affected them a little bit. But by and large, I think UPI created a market for more credit cards by digitizing a lot of cash transactions, which then made it easier for the issuing banks to underwrite. Now, okay, for ONDC, it's going to be a little more complex. We're not here to kill anybody. Like, at least in my mind, our measure of success is when a dominant incumbent participates with us, because then we're giving them something they couldn't do themselves. And Paisa Bazaar is a case in point, because if you say a dominant market, a loan aggregator chooses to participate on ONDC, we've given them, we're going to be bringing them public sector inventory and a 6-minute journey, which they don't have today. So don't look at ONDC as here to kill Swiggy or Zomato. The question to ask is, what would make Swiggy or Zomato or Amazon or whoever participate with us? Our job is to deepen and expand the market, not compete with the private players. So I just wanted to clarify that, which I didn't when give the audience.
Sure, thanks for that, Hrushikesh. And that's a good example also, because I remember the days when the switching fees for Mastercard Visa used to 4.5 rupees, and then NPCI Rupee came in and it came down to 60 paisa. So what it does is when something like this we do on our own within the country, we really benchmark a lot of things in terms of quality, in terms of price control, in terms of a lot of things. Giridhar, let me come to you. And let me now skip the ML part of it in the interest of time and directly move to the challenges. What are some of the challenges you feel when we talk about, leveraging data for financial innovations? And probably what are some of the innovative use cases as well?
Got it. I'd like to slightly digress because I've been dealing with the B2B market when it comes to the financial innovations that I have seen when it comes to the business spend process. The data currently in the corporate world sit in a lot of silos. Just an example, in the morning when I was collecting everyone's visiting card, that's how the data pockets currently are. It's in different size. It doesn't fit in a single pocket. The source, where the data is coming from, it's never in a standard format. So that's where most of the integrations also fail when it comes to the corporate world. Though people talk of a lot of APIs, a lot of integrations, there are very less use cases of a successful integration where everything is working very smooth. Because the initial source where the data is coming. So we also deal with historical data. When it comes to historical data, there are certain dimensions which are not available at that point of time, which is never factored, which is never being captured in the first place at all. Now I have that information. I can go back and change the data over there, but I've already taken particular decision. That generally where the biasness comes from. There are a lot of decisions already taken basis of data which was there, which didn't throw a new dimension onto it, which I currently have. How am I going to deal with it? It's a major challenge, but this is very subject. What generally happens, we do this Harrison test. So same set of questions asked to the same person, the answer is going to be different at any given point of time. So that's how the data interpretation is going to be. And when I talk about AI/ML, how am I going to consume that analysis? The data probably is the same. Data is going to be the same. But how it's going to interpret is a point. What is that I'm going to pick out of it is a question. Probably a finance person of a corporate A might be interpreting it in a different way. But having access to data is prima facie the fact. But how am I going to take the AI/ML learning over there is a question mark. That's going to be a fundamental challenge at any corporate. And the source, I'll come back to the source of data. As many as these tools have access to data, like when we do a spend analysis, being a spend management company, the transaction information is what prima facie the truth, where the actual transaction is happening, which coming into a system, the corporate is unaware of it. Now it's being second-hand fed into the system, where there's a process of workflows inside the corporate, where I'm analyzing whether a person needs to spend or not, which is happening post facto. Now, what if this is happening at source? Can I do it at source? Where I have the basic information, most of the card transaction currently gives you most of the information, what I need. I don't even need a proof of expenditure coming my way. The card transaction gives me all the source that I need. How am I able to take a decision basis these information? Currently, am I moving in that direction? The intent is always there. But probably the challenge is going to be the current. I also keep taking this reference of changing the tire of a moving car. There is already a work happening from the past data, and there is this new thing coming all over, and everyone are like gung-ho about all the new innovations happening. There's a API war, there is a data AI/ML learning, but there is already a work in business as usual happening. How am I going to change that? I can't stop it. There is this period of transition, and how am I going to manage that is going to be a major concern. That's the major challenge I feel with the current thing, what's happening in the market.
Thank you, Giridhar. I'm going to sum up the panel now and actually open for Q&A. And before we dwell into innovations, I can see the timer. We are just under 2 minutes. So we'll just open for Q&A, guys. So any questions you have on this subject to any of the panelists, please feel free to raise your hands and ask the questions. Okay, no questions. That's great. So let me then come to the panel and maybe spend 30 seconds each on some of the innovations that we see while leveraging data in today's times, specifically in the financial industry. Let's start from you.
Yeah, so I'll go back to the corporate world that I deal with, probably with the travel coming in. So there are a lot of elements into the travel currently, which is not factored. Like probably a business leader is wanting to travel on business and currently is not aware the impact of it. So as of now, even today, there are a lot of travel requests which goes to approval without the cost being factored. Now, going back, I don't even know if, what is the market dealing with it? You know, if for a business travel, if I'm booking a ticket 3 days prior to the travel, what's the cost difference versus if I'm doing an overnight flight travel? So this information being on table.
Let's keep it under 30 seconds, the timer is out. So,
Yeah, this is one thing.
My request to everyone is let's keep it under 30 seconds now.
So this putting the information on the table before actually someone takes a call is probably one layer what we are looking at.
What I think will happen is we're weaponizing the ability to share consented data. I think what you'll see, and we are actually working on it, is confidential computing, where you can stick data in a black box, someone can send a model to it, get the same outcome, but they can't see the data till they becomes your customer. So I think that will be the next big thing in the next 2-3 years, as we hopefully become more successful over time and more data is sent out. This will become really necessary to prevent misuse.
See, one of the best innovations that I've seen that data has happened is the way financial inclusion has taken place in the world today. Reaching out to last masses in terms of lending is because of data. Unless and until you had data of that last level mile of people, you couldn't have enabled the financial inclusion lending process. So I feel that's one of the biggest innovations that has happened.
Risk management and alpha generation. I think given the way the financial systems run, the markets run, with this huge amount of data and the big ability to process, understand, store, and massage insights out of it, primarily risk management is changing and alpha gen is changing.
I think it's the lending domain where we predominantly are. What I see is that public sector is taking the innovations forward and coming up with pre-approved solutions for even the B2B space now. We have seen pre-approved personal loan products, being enrolled, but with the advent of cash flow-based lending, which is being promoted, a lot of pre-approved offers for businesses who are existing customers to public sector banks, that has really led to a lot of penetration in terms of, getting customers onboarded in terms of a new credit layer.
Being the last, it's just time up, but still I'll take a chance of the 30 seconds I have. Interestingly, currently I'm working as a data architect for one of the innovation hubs, part of a regulatory, which is doing the bridging the gap as to what was the policymakers' objective as to, given the gender, what should be the policies and the benefits that gender should get in India per se. And it's easy said than done, where the private sector lending should reach a person of a household of certain capabilities or requirements. We're trying to bridge that back as to see what is the actual hotspots, what are the opportunities. We have now ended up collating close to about 36 data sources. First-hand data source from the banking financial sector is one part of it. Second part is the secondary data sources from RBI, from World Bank, from ADB, NSSO, Census. Just the plethora of data, by looking at it, the categorization of data at source and categorization of data when you want to compile it for understanding the benefits, it's a nightmare on the flip side, but it's a great opportunity to understand how data is available everywhere, how you can actually harness it back and bring it to the policymaker to say, hey, you are right here in this district for this lending product, but in that district you are wrong. That's where we are.
So I think, the last question, everyone has summed up the discussion points of the panel. So I'm not going to sum it up for you. Thank you, everyone. And that's all from us.